Hi everyone, welcome back to the Technical View. This is where we look at the world indices and the world markets just from a technical analysis point of view and, your classical chart patterns and all of the good things that come along with that. It's a really nice way to just get a supplementary look depending on what you're looking at usually, whether it's fundamental analysis, macro, world views, news, whatever it is. This is another great way to just see what's going on in the world. What we're going to do is just start with the All Ordinaries down under Australia. This is the market that I personally trade, and if you've been following this for the last couple of months, we've been talking about the big head and shoulders pattern, which technically or often leads to the downside. But what I'm going to do today and for this week's analysis is just pare it right back to basics, because sometimes the fundamentals are just the most simplest thing and the most effective thing as well. And what that means is a simple line on a chart. But it's actually quite a powerful line because that line is a line in the sand. Now what that means is currently, as you can see, it's a downtrend here. We've got 1, 2, 3 points here and potentially another point in the future. In other words, the market will tend to find resistance at around this 5,200 level in the future. It's going to provide very heavy resistance. Also on the other side, we've got this this support line, this neckline. Now the market did peak below that over the last couple of weeks, however it's come back and it's still trading within that range. So the reason I say these lines on a chart is because what these lines actually represent, it's the market finding equilibrium, or it's finding agreement. So in other words, between these two lines is where the market currently agrees that it should be priced. And that's the buyers and the sellers, everyone, thousands, millions of people coming into the market, and according to all of their decisions combined, this is where the market is actually physically priced. So why these lines are important is because if the line is breached, then it means that potentially the market is going to find a new level of agreement or a new level of equilibrium. So that's why I was very concerned when it peaked below this level previously. However, obviously people weren't ready for it yet. So it's still within these two levels. And really, there's not much more to say until it breaks one of these levels and the market is going to go for a new level of agreement. Technically on the All Ordinaries as well, it's still in that downtrend. I was looking for a zigzag up. That hasn't happened. So no problems there. Let's quickly look at the S&P 500 because on the S&P 500 we actually did have a crossing of that short-term trend line. So you've got long-term lines and you've got short-term lines. Nothing too fancy. It did have that and it did zigzag up. So technically very short-term uptrend, and it has it's held there. It's held at that level also. So what I'd be looking for, it's a short-term uptrend currently. It's got resistance at 2020 on the S&P 500, which is just that line extended. It also has resistance at 2100 on the S&P 500. And this short-term uptrend would be wrong if it closes back below the 1890 level there, which is just that previous trough. Very, very simple stuff. And of course, as it stands, the really long-term pattern, so, we're talking short-term patterns there, but the long-term pattern over the last 2 years is still that head and shoulders pattern, which does tend to show lower prices. Obviously, this medium-term zigzag up is still a medium-term uptrend as well, and there's the line in the sand for it to be wrong. Let's look at the FTSE as well in Europe, all the Western markets. Now, really similar deal as well, still in that downtrend, still has that downtrend line here as well. It also peaked below that line, and now it's come back up into that equilibrium level, that agreement level, and now we're heading towards the resistance of around 6,100, 6,150 on the FTSE. Similar scenario to the S&P 500. It does have that very short-term uptrend. I'd be wanting it to cross that medium-term uptrend line really, but it has made the zigzags, so that's a good sign as well. And obviously still in play is the longer-term head and shoulders pattern until we get the market that breaks out of that line in the sand there. So next, let's look at the NSEI, or the National Stock Exchange, India. Now, this is a very similar chart. As you can see, not too difficult in any way, shape, or form. We've had these trend lines or lines in the sand forming a big channel over the last year. Now, what's happened is it's actually accelerated to the downside, but it's still holding that level the bottom level here. Again, it did peak below it just recently. The equilibrium or the agreement level is still between those two. However, we do have an accelerated trend line, so that is, an accelerated downtrend, you would call it. And what I'd be looking for that to change, if that was to change direction, it would have to get above that trend line and the previous peak, which is around 7,300 on the National Stock Exchange India. So yes, it has found support here, but it does still remain in that downtrend. Now, last but not least, let's check out the Shanghai Composite. And last week, what we were talking about was it had found support at that trend line here. So what I'm showing you is the last year, and that's the neckline of our, another sort of head and shoulders looking pattern on the Shanghai Composite. What we were looking at as well was this continuation pattern to the downside, which broke out, and that's fallen away to that support level. So, all of this is textbook stuff. It's actually quite amazing the way that it's playing out. Now, what we were looking for was for this to actually become another continuation pattern. What happened was we had a very, very, very short-term uptrend, so it closed above that line in the sand, you'd call it, and then it made the zigzag up, moving upwards. Now that has since negated, or it's very close to being negated. So what I'm looking for now is it's still technically in that short-term uptrend, but it's looking very, very dicey, especially with this big long day down. And if it was to close back below that 2,700, then what that would mean for me was that this continuation pattern to the downside is back in play. So we had as you can see, it shuffled upwards, and potentially the same thing might happen here, but it shuffled upwards for a couple of months, and then it had that continuation pattern break to the downside. Potentially we might see a similar thing here where it may shuffle up and then break to the downside, but these are the key levels. So 2,700 is definitely a key level on the Shanghai Composite, and that's the level where the continuation pattern comes back into play. So guys, I hope that has helped. I hope you've had a great time, as good a time as I've had looking at these charts. I absolutely love this stuff. Feel free to check out my website. It's asxmarketwatch.com. It has a whole bunch of free stuff, a few trading courses, a few trading system courses, and that sort of thing with using AmiBroker. Really, really cool. Check it out. Leave a comment below or at my site. Feel free to contact me, and have a great week. Happy trending until we meet again, and bye for now.